In this video, we're going to try to figure out when Nio will be profitable as a company and also how that will affect the stock price. But first, to figure out when the company will be profitable, the easiest way to do that, in my opinion, is to look where the company make losses. So on the latest quarter, they made 2.4 billion US dollar, which you can see on this column. That represents roughly 75% increase quarter over quarter. You can also see that the vehicle delivery was actually even faster than the revenue increase at 91% almost. So the question also that arises here, why doesn't the revenue increase by 91% as the vehicle delivery did? Well, part of the reason is actually, you can see that the average selling price goes down from 38,500 roughly to 37,500. And that is a trend that we have seen over the longest of, 3 years now. Starting from 3 years ago, they were roughly 55,000 per sold car. Now we are down to 37,500 and projected to go even further down. But we can see that doesn't necessarily mean a bad thing, because the average sales price is down 2.5% quarter over quarter. But they also managed to cut down the cost per sold car by 5.8%. So essentially double the rate of the average sale price decrease. They also decrease the cost per sold car. So that's very important, because you can see that the cost of vehicle sales, so this is negative cost, for example, doesn't increase. It only increases by just below 80%, whereas the car sales increase by 90%. So I think that's a very interesting part. But looking also that the vehicle sales came in at essentially 2.150 billion US dollar, and then the cost of vehicle sales is almost 1.9 billion. So there's a delta of 250 million, which is essentially 250 million in gross profit in a way to think about it. But the other part is then, okay, so they don't lose money, at least in terms of gross profit, from vehicle sales. So where else do they lose money? So here we can see that the other sales, which includes, for example, battery swap cost, merchandises and services and all different things that comes in the Nio houses, came in at 240%. 243 million US dollar, but the cost of the other sales is actually higher than the revenue. So they are losing money on the other sales. But the question is then, when are they projected to actually cut down the loss on the other sales? In order to visualize that easier, we can look at the graph here. So you can see here that the other sales from Q1 of 2021 to Q2 of 2024, so the actual numbers, the white part of the graph is the cost of the other sales, which is sadly higher than the actual other sales, which is the revenue. So you can see there's a, there's a gap of roughly going, it depends where you look at it, like 35 million in Q4 of 2021. Then at the highest it was 56.2 million in Q4 of 2022, and even higher Q4 of 2023. But you can see since Q4 of 2023, we are cutting down the cost of other sales to minus 30 million. So the question is, when are we projected to cut down this even further? In my projections, this might be a bit too optimistic, but this is how I went with it. I think the company will kind of break even on the other sales roughly in Q3 of 2025 or Q4 of 2025. So that means that's when we actually see the delta, which is shown in the green line here, in the green part of the graph. Roughly in Q1 of 2026, we should make the first surplus. But again, these are projections. It could be a couple of quarters earlier or later, so it's difficult to say. But I just try to model this out. But the important thing is that we can see actually that over the past 3 quarters, Q4 of 2023, Q1 this year and Q2 this year, they actually managed to more than halve the loss that they make on the other sales. So now we know that at least, although we are making a bit of loss on other sales, they are projected to start to slow that down. So that's great to see. So then the question is, after your revenue and you look at the cost of sales, you have roughly 232 million US dollar in gross profit for Q2, right? And that represents 244% increase compared to the previous quarter. So that's good to see. But remember, that's gross profit. The problem is that the net income still is, after tax, just below 700 million. So the net income, although improved a bit, but it actually improved by 3.3% compared to the previous quarter, which is, in my opinion, a bit, lower than I would have wanted to see. Because in the best case scenario, like when you increase for example, the revenue by 100%, or if you increase the car sales by almost 100%, it's a bit, bad that you increase the net income, or in this case, net loss, only by 3%. Now, obviously, it could be worse. They could have increased this. So at least it's improving, but it's improving slow. But the question that should be on everyone's mind is what's the pace, and why is that matter? Where we can see that the company has 5.7 billion roughly left. Now, if you look at my modeling, so this is now when it gets really interesting. So for example, for Q3, I expect that the vehicle deliveries will increase by around 10.5% to 63,500. Okay. And the interesting part, we can see that the net income or net loss will again be down by almost 4%. And if you add those 3.3% and then 4% here almost, that's almost 10% less than, for example, Q4 of last year. Sorry, Q1 of this year. So it's moving in the right direction. But then let's look at it further. So let's go to, let's say, Q4. In Q4, I expect that the deliveries will increase again at 78,000 cars delivered, which is 23% increase compared to Q3. Now, if you look at that, that would represent, although also that I've taken actually into consideration the average sales price. So you can see that I lowered the average sales price to a historical low at 37,000, which is realistic in my opinion. We have the Onvo cars coming on. So as Onvo enters production and deliveries, they have lower price. So the average sales price could be lower, even lower than this. But we went with 37,000, and we can see that from that calculation and 78,000 cars, we get just north of 3.1 billion in revenue, of which vehicle sales is 2,886 million. Other sales is at 278. So at 278 million, the other sales is starting to now finally be more than $1 billion run rate on a yearly average. And then you can see that the total cost of sales is 2,748. And that leaves us with a gross profit of 373 million. But the interesting part for me is that this is good because compared to Q1, for example, look at where we went from Q1 of 2024 to Q4 of 2024 with my estimations. This is more than, 5-6 times the size, let's say 5 times more than Q1 gross profit. But the problem with, when you look at these kind of numbers, first you have your revenue, then you have cost of sales, and then you end up with a gross profit. But then you have your operating expenses, like for example, research and development, SG&A, and I guess stock-based compensation and all of that. And I project that Nio will be at just below 1 billion or thereabouts in total operating expenses. So once you remove the 998 million from the gross profit, you then end up with minus 624 million in income or loss from operations, which again is less than Q3, which is less than Q2, which is less than Q1. So we're moving in the right direction. Then there's a bit of uncertainty because, as we go past the loss from operations, it's a bit difficult to me to know where, how much the interest income or interest expenses or other expenses that come into the play. Historically, there's no these ones, it's not necessarily only related to vehicle deliveries or anything else. So it's different to know from outside the company. So these ones, I try to be conservative. For example, you can see that it's up and down. Mostly it's a positive contribution to the income. But you can see there sometimes it's actually minus 32 million. Here is minus 23 million. And sometimes in Q3 or Q4, there's a healthy addition. For example, in Q4 of 2022, they had 140 million in addition to that. So you can see once you go from loss from operation in Q2 of 2024 at just below 1 billion, they ended up at net loss at 838 million. Still a lot, but less than 976. So my projections is that I went very low with, for example, in Q3, I went with 28, which is roughly same ballpark, 22 million or 28 million. It's not a big difference. But in Q4, I added 100 million in addition from interest income to Nios balance sheet, to Nios income. And you can see that it's still, you know, much less than half that they had in Q4 of 2023, and also less than 2024. Again, these numbers could be wrong, but even if it's, let's say, a 50, so if you actually change that to a 50, you still see that the net income the net income after tax is still going to be now below 600 million. But again, I will stick with 100 here. So when we stick with 100, we are 525 million in net loss for Q4 of 2024. And once you remember the cash position, it should be now at 4.5 billion. So by Q4 at this pace, I don't think we should expect, you know, any risk of dilution. We can also see that I've actually taken into consideration healthy amount of SG&A increase because of higher sales compared to, for example, this is actually all-time high, I think, for the company. The previous all-time high was almost 560 million in Q4 of last year. So now I think, yeah, let's go with 568, which is another all-time high. And then the R&D, I would expect and hope that it sticks around 440, maybe 460 at best. But anyways, this points, even if, let's say, you increase the total operating expenses, which is R&D and SG&A and other operating income or cost, even if you add to it another 100 million, we would still be at minus 724, and then once you reduce this, we could be at minus 600. So I think we are moving in the right direction for 2024. And now let's go to, let's say, Q4 of 2025. This is interesting. So in 2025, I think if you do the same kind of mathematics, now I'm basing this on 110,000 in deliveries. I think it's possible, because if we get almost 80,000 in Q4 this year, I don't think 110,000 is out of play after more than 1 year of ramping of Onvo, and then Firefly maybe will start to deliver as well. And remember that with Nio had a bit struggles to sell cars in Europe with Nio main brand because they are very expensive. But you would expect that they should have better chance of selling their Onvo brand in Europe because it's at lower price, although they will also sell more in China compared to the traditional Nio brand in the long run from Onvo compared to Nio. I expect the same thing in Europe. So if they manage to sell 1,500 or 2,000 cars in Europe in 2024, once the first full year of Onvo deliveries in Europe, maybe we should expect 5,000-6,000. So that's, you know, that's some nice 100 millions. But anyway, so looking at Q4 of 2025, this is interesting because now we can see that the other sales is up to 355 million. We can see that the operating expenses, I still leave room for increase of operating expenses, but, you know, at now over 1.1 billion, we can see that the gross profit also now is essentially double than 2024 Q4. So the net income is very important, is less than 340 million or thereabouts, with a cash position of 2.5 billion. And again, this is, you know, tiresome, but I think it's important for stock investors to see this. And if you do the same thing for Q4 of 2026, then you should see that the net loss is now going even less than 100 million based on 150,000 deliveries. So essentially, it's a, you know, optimistic vehicle delivery demand from Q4 of 2024 at 78,000 to 150,000 in Q4 of 2026, 2 years later. But actually, it's not, you know, that impossible for Nio because it's less than a doubling. And also, if you look at, for example, let's go 2 years ago. So 2 years ago from Q4 of 2024, in Q4 of 2022, Nio was at 40,000. So it's essentially the same pace. But remember now they will have two brands. They have Nio and Onvo. And the electric market adoption rate in China and also the rest of the planet is increasing. So I think there's room to believe that even if they lose a bit of market share compared to the rest of the market size is increasing. So I think actually it's realistic that Nio will sell 150,000 cars per quarter in Q4 of 2026. And then we are very close to break even for Nio. Net income was minus 75 million. And then, so when do we start to see, a positive net income? And here we go. According to my model, in Q3 of 2027. So pretty precisely in 3 years from now. Now, obviously, all of this could change. Let's see what are the caveats. So I think that the vehicle delivery numbers, I'm quite confident of it because I'm not increasing, the vehicle deliveries insanely. Like, they should just a bit more than double, or let's say triple in 3 years in Q4. But again, look at Q4 of 2024 to 2026, it's just less than a doubling. So I think that's possible. I genuinely think that's possible. The problem is the gross margin. It's so difficult to know, how much gross margin will they have, because they had previously, like in 2021, 18%, 17%, and then it kind of completely nosedived in 2023 early and late 2024. At one point we had 1% of gross margin. Now we are back again to 9.7, so just below double digit. I think it's possible to get at least to, let's say, I believe by 16% in late 2024, I think it's realistic, because they roughly double their vehicle output, and a larger economy base, you should essentially improve your margins once you go through your suppliers and buy double the amount of whatever unit component you buy. You should usually see economies of scale starting to be visible, and this is essentially the same point as you can see here. Look at Q4, for example, Q2 of this last quarter. You can see the gross profit margin is at 9.7, which is essentially almost 100% increase compared to the previous quarter. And you can also see that the vehicle delivery increase is 90% increase. So yeah, I think the economies of scale comes into the picture. And if the gross margin, also there's one scenario that this gross margin is a bit higher. So if we, for example, let's say if we account for, I don't know, let's go with 19% here. This is gonna make a whole lot interesting. So 19% by Q2 of 2027. Then we will already make a surplus in 2.5 years from now. And there's no risk of, in that scenario, any dilution, because they would have enough money. If you look back now, 3-4 years from now, I think it's highly possible that the bottom for Nio has already been in. And if it has not been in, it's maybe another, retest of, I don't know, the low 4 or 3, high $3, $3.7, $3.6. If somehow something bad happens and the stock market crashes again. So that's possible always. So I'm not an investing advisor. I'm just sharing my own ideas. But in the long term, as the gross margin increases, remember in 2023 is actually when the gross margin started to, take a dive. So if you go back here again and look at the gross margin here, you can see that 2023 we had like 1% in Q2, we had 1.5% in Q1, we had 3.9 in Q4 of 2022. So look at the dive from Q3 of 2022 to Q4 of 2022. There's a 10% cut in gross margin, and that's based also on just a 30% almost increase in vehicle deliveries. So the vehicle deliveries increased by 27%, but the gross margin takes a really nasty hit. You can see by 70%. But yeah, so I think it's difficult to say, but in my opinion, the worst might be past us. And if you look at the market cap at below 10 billion, let's say 10 billion, for a company that is gonna have, I don't know, like let's say in next year 4 billion in Q4 in revenue, and they will have, although not making a profit again, but on price to sales ratio, they will, if you take 4 times 4, that's 16 billion. So 16 billion according to the run rate of Q4 next year in revenue, and you'll have a market cap of 10. So we are buying Nio at price to sales ratio of 0.6 for a company that growing, like look at the growth of Nio. Even though the stock price has been taking a hit, it's expected to grow more than 5 times from 2020 to 2024 in annual deliveries. So yeah, I think it's if they just manage to get order of the gross margin, they don't hopefully they don't increase the operating expenses by a whole lot. We can see that they ballooned the operating expenses from, let's say, 600 million Q2 of 2022 to 1.1 billion in Q4 of 2023 in around 1 year. But then they cut down on the operating expenses. So I expect them to be in next year, Q4 2025, same level that they were in, let's say, Q4 of 2023. But then based on a much higher revenue and better gross margin. So I think it looks better for me. But anyway, so my answer to the question that we had in the beginning of the video, when will Nio be, when will they have a net loss that is positive and becomes a net income? Well, according to this data right now as it stands is Q3 of 2027. I will try to update this once every quarter based on, new data, and maybe the gross margin goes up, maybe it goes down, maybe the cost of vehicle sales goes up or goes down. So we have to update this every once in a while. But as of right now, I think we should not expect a net profit before first half of 2027. So thank you for watching, and please like and subscribe, and see you in the next one.